Good afternoon and hello and welcome to Who Moved the Market. The market is actually moving today and is moving on the way down once again. However, we have Vivek with us, and Vivek, we're not going to talk about stocks moving down, but the ones that are actually moving up today. Who moved the market today? Well, you can say the Government of India and Indian Railways. So Vivek, I guess we have some very interesting stocks and companies in focus. There is RVNL, there is BHEL, and there is Titagarh Wagons.
Yes.
And the common link between these three stocks and these three companies is that they could stand to benefit from what seems to be a humongous, a really large order for Vande Bharat trains. Is that right, Vivek?
Absolutely right. So, when you're talking about this entire opportunity, it's a significant opportunity. The headline number, as you said, is 58,000 crores. So it's a significant opportunity that a lot of players stand to benefit. So what happened yesterday was that the bidding details came into the public domain. Okay, and in this bidding details, there were two sets of bidders that were declared as L1 and L2, which is the lowest bidder 1 and the lowest bidder 2.
And this is an order for 200 trains.
200 Vande Bharat trains.
Vande Bharat trains, okay.
Okay, we'll break that down a little further, and we'll also break down the number of the 58,000 crore.
Yeah.
So RVNL, in a JV with a Russian partner, emerged as the L1, and their bid was around 120 crore per train.
Okay.
The other two companies that we spoke about is BHEL
and
Titagarh. They are now at L2, and their bid was at around 140 crores per train.
So lowest bidder is RVNL. They are offering to make this at 120
crores per train.
Train. Okay. So what happens? But they are not the ones getting that entire 58,000 crores, right?
Absolutely. So now let's break that down further. RVNL share in its own JV partnership with the Russian company is 25%. So whatever L1 bidder gets, they will get 25%.
25%. Now that's really important, because otherwise you look at 58,000 crores, huge number, L1 bidder, RVNL. But this is important. For every 100 rupees that they will book, the consortium will book, RVNL gets 25 rupees.
Absolutely right.
Okay, that's
now there's another, in the tendering document, there is another catch, or you could say that there's another process that is going to be followed. So the L2 bidder actually gets the opportunity to go ahead and match the L1 bid. So out of the 200 train sets that are going to be made, 120 train sets will be made by the L1, and if the L2 bidding team or the L2 bidding consortium matches that particular bid, they will be allowed to make the remainder of the 80 trains.
So that means BHEL and Titagarh, which as of now have offered to make these trains at 140, need to bring that price down to 120.
120 crore, yes.
Only then do they stand to
that's right.
Gain a part
in case they don't, then it actually goes to L3. But we had Titagarh on the channel, and they said that most likely they will be going ahead with this particular price point, which is the normal course of action typically followed in this tendering process. Do you want to talk about the 58,000 crore split now or a little later?
No, actually so that's interesting, because that headline number is 58,000 crores. You've already told us that the L1 bidder, which is RVNL, will get only 25% of their share because they are in partnership with the Russian company.
That's right.
So now how is this broken up?
Okay, 58,000 crore. So because it's 120 is to 80, in that same proportion, the L1 and the L2 team gets it.
Right.
Within 58,000 crore, 26,000 crore is the upfront payment on the delivery of the train sets. So you do that in a ratio of 120 to 80.
Correct.
And out of that 120, 25% is RVNL. Out of the 80, so broad-based number around BHEL and Titagarh around 4,500 crore, and a little less than that would be for an RVNL.
This is really important. Please repeat this, because when you think L1, you think RVNL will get the lion's share of the revenue, but that's not the case because of the intricacies that you explained.
That's right. So, so now the number that we are talking about is 26,000 crore, which is the number based on 120 crore per trains. Train set that these companies will get, and 25% share to RVNL, and the remaining goes to the joint bid for Titagarh as well as BHEL.
Okay.
So once these trains are delivered, BHEL stands to gain around 4,500 crore, similarly for Titagarh, and RVNL slightly lesser than that. Okay. Now the remainder, now we have to go back to the main number of the 58,000.
Right.
26,000 we've already broken down.
When you deliver the trains.
We've spoken about that, and that is clear. Now the remaining 32,000 will be paid over a 35-year period, and this is mainly for operations and maintenance.
So servicing and maintenance.
Exactly.
Okay.
It will be the responsibility of these companies to maintain the upkeep.
Okay.
And generally what tends to happen is that, it will be booked in tranches.
Okay.
And it's also going to be interesting to see whether, now we know the number of trains is 120:80. It's going to be interesting to see whether, even for the operation and maintenance part, whether the same ratio is maintained. It most likely should be that particular.
The L1 bidder maintains sort of 120.
Right.
And whether it's L2, which in this case
3
is
is to
BHEL
2.
or L3,
Yeah.
they get to maintain 80.
That's right. A 3:2 ratio is what.
Okay. So that's how the revenues are broken up. So yes, let's not get. It's a great number, no doubt about it. But it's not like all the money and 58,000 crores is coming home on day one, right?
Absolutely. So typically for a capital goods company, we look at the order book, right?
Yeah.
So it's important not to add, the headline number to the order book, but rather the opportunity per year basis, and that is how you start building the valuation estimates for the year ahead.
Sure. So speaking of the order book, typically when you're looking at these large railway contracts, how long between headline announcement and actually booking it in your books as revenue in terms of execution picking up?
So we'll not discuss the operations and maintenance part because that will be done on a yearly basis, spread out over 35 years, and let's say maybe it's the direct headline number divided by 35.
Sure.
In this case, it will probably be a project-based or a milestone-based payment.
Okay.
So let's assume that at 50%, or if you deliver, let's say 60 trains, you'll get half, and then the remainder gets half. So ideally, over the next 1.5 years, these trains should be operational. So you should be able to travel by the Vande Bharat trains in the next year and a half. There have been delays, it is expected to be done by December. It's moved on, but still, it is going on, and these are very high-speed rails. These are excellent technologies. They'll probably change the face of the Indian Railways itself. The speed at which these trains are coming out. So you can expect some delays, but the revenues that do come in will be, hopefully within the next 1-2 years.
1 to 2 years, we should start seeing
brokerages. I think Philip Capital, I think you were talking to me about it. They've mentioned that probably over the next 4-5 years it might get amortized as well.
So we'll come back to that. There are some brokerage notes on BHEL that came out today. But Vivek, I want to take a step back. That this is the news here and now. Now we've understood the math and the breakup of this order. But if we just take a step back and talk about the opportunity that a lot of the listed companies have been getting from the Indian Railways, from Vande Bharat, then sort of jog our memory. Is it getting bigger and better? Because some of the brokerages are also pointing out that the pace of ordering, the pace of these awards is actually improving, right?
Absolutely. So it's the biggest opportunity. When you're talking about the Indian Railways and when you're talking about capital goods, it's actually the biggest opportunity. To give you some perspective, right? So in December 2022, just a couple of months ago, Siemens was awarded a 26,000 crore locomotive project in India.
Okay.
Now, that particular order was greater than their order backlog of a little around 17,000 crore. So the entire existing order backlog that the company had, one single railway order was
bigger than that.
That's right.
So 26,000 crores was Siemens' order in December last year, and their order backlog was, you said, 17,000
crore.
And that tells you about what a tectonic shift can this really be, right? With the railways undergoing through its modernization program, this is obviously something that I guess no serious capital goods company can choose to ignore.
Absolutely, and which is why capital goods companies are doing very well. The 26,000 crore figure again is the headline number. So even that will be broken down into actually delivering the locomotives and the operations
the service and maintenance.
Absolutely. But yes, the actual number is the headline number of course is 26,000 crore. It's the important number to watch out for, and Siemens, brokerages are extremely bullish on the company. Capital goods makers, today you're seeing BHEL do very well. You're actually seeing Titagar Wagon do very well. We had them on the channel. We're extremely confident, extremely bullish about the opportunity. So clearly, the focus of the market in the last year and a half, in fact, our colleague Nimesh has been highlighting it throughout about how the railway PSUs have done so well.
Right.
This is simply because of this opportunity that they are seeing. Locomotives, even apart from the Vande Bharat opportunities, are quite big as well.
So, I want to talk to you about that, because if there's one sector the market is fascinated with right now in this downbeat environment, it's capital goods. But before we get to that, just a quick snapshot, purely in terms of, financial health, performance, these are two giant PSUs. I mean, RVNL is a behemoth in its own right. Then there is BHEL. What do the last couple of quarters tell us? I mean, how have they been doing, just purely in terms of business and financial health?
Okay, so first let's have a look at RVNL. A little bit about the business model of the company. The company is mainly a project management consultancy company. So what these companies generally work on are wafer thin margins. They are responsible for the execution of the project. Now, earlier, their business model was that they got nomination based orders.
What does that mean?
What that basically means is, so yesterday you actually saw competitive bidding, right?
Right.
They didn't get the order. They had to bid for it.
Correct. There were other players that were, putting up their bids as well.
Earlier, it used to be they used to get the orders upfront. So they had better margins. But now, because it is a competitive based bidding process, their margins do get compressed. And the other thing to keep note of, generally when RVNL is concerned, the order book generally is very large. So RVNL management has actually been guiding for an order book of around 1 lakh crore. But what it actually translates to the bottom line is a lot lesser because of the thin margins that they work on. Simple figures, 2022 revenues 19,300 crore, profitability around around 1,000 crore.
Okay.
So there's a lot that
you have a big bulky top line, then because of the margin issue, your profits end up being a little on the lower side.
Absolutely.
But that hasn't really stopped the market from valuing the stock so differently. Look at what's happened to RVNL. The stock was around 30 odd rupees in, I think, September or August of last year. Today it's 60. It's just doubled in a matter of 6-7 months. So despite this margin issue, is it the opportunity that the market is kind of really going gung-ho on?
In an environment like this, growth is something that is rewarded. So when you are able to grow your top line and when you are able to actually have visibility of the opportunities, and these opportunities are coming in, right? Eventually they will book the revenue.
Got it.
That is precisely what the market is lacking, and it's been a re-rating simply because of the fact that PSU stocks across offer very good revenue visibility, which other stocks at this point of time are unable to give. So the capex theme, the push, the public capex that you are actually seeing has kept all of these stocks. So it's not just an RVNL, it's been an IRFC, it's been a RailTel, all of these names too have done very well.
So railway stocks zooming ahead.
Railway stocks have been, and our colleague Nimish has been constantly pointing it out, and he's put out the opportunity. Just for a little bit of perspective, just in Vande Bharat itself, the tranche is for 400 Vande Bharat trains. So now we've spoken about 200.
200, which is happening through this order.
So analysts estimate that this is a 1.7 trillion rupee opportunity size. So 1.7
just
lakh
Vande
crore.
Bharat itself.
Just Vande Bharat itself. High speed rails. So now we've spoken about 60,000. Of course, the math, the number, headline number is always a little slightly misleading. But like how we broke down this 60,000 or 58,000.
But it is. I mean, from the government's perspective, that's the amount of money they're putting aside for this order. Now, whether you're giving it for the delivery of the trains or its maintenance, that's that is the large chunky.
So the opportunity is 1.7 trillion, and which is why railway companies, railway ancillaries, capital goods players, even the smaller guys who stand to benefit. And you had something?
No. It's really good you brought this up. I missed this point because this opportunity is not really restricted to only these companies that are making the locomotives. I'm sure there's a whole supply chain, other vendors. I'm not sure if there are too many other listed companies that also benefit from this Vande Bharat / railway modernization drive.
Absolutely. So some interesting trivia. So the Vande Bharat trains are actually made in government factories. So there'll be L2 will make it in Chennai. I think L1 will make it in another place. So actually, they will take their team, they will take their technical know-how, and they will actually it'll be made in the government factories or government specified places. Typically, what's happened in India so far has been, it's been the foreign players, the foreign multinationals, let's say an Alstom, players like that have typically got the bulk of these orders simply because of the technical know-how that they have. So for someone like an RVNL, someone, homegrown player like a Titagar Wagon, a BHEL, to actually get these orders in itself is quite encouraging. Now, breaking it down further, there's something known as a propulsion system. So which are the key players here? Alstom, unlisted, Medha Engineering, unlisted, Siemens, listed, BHEL, CG Power. These are the guys that make it. And when you're talking about component suppliers, other key component suppliers, you have names like ABB India, which is a listed guy, CG Power, BML, these are some of. And wagon makers, you have names
Titagarh
like
wagons.
Jupiter Wagons,
Correct.
you have Tex Maco Rail, and if
Yeah.
you see even Jupiter Wagon stock, these stocks have done very well in the last
Got it.
last
Got it.
year, last 6 months. They've really done very well, simply because of the opportunity and simply because of the kind of visibility that the markets are expecting.
So the whole ecosystem really benefits. But that brings me to the last question. All the companies and a lot of the stocks that you've named have shot through the roof. I mean, some of them are sitting at their lifetime highs. The way your ABB and even Siemens, the way these stocks have moved, they moved like a tech company or an FMCG company, right? After being in the doldrums for the better part of my career, I kept waiting to see when the real economy stocks would move. That time has happened, but not with BHEL.
You mean the real economy? You could call it, the old economy.
Old economy, yeah. Exactly. So all of that has happened, but look at BHEL. It's going the reverse way. That stock is sulking. I have, one brokerage report. This is Haitong actually. They have an underperform rating, a target of 55. I mean, for them, the concerns are that, there are some structural headwinds, etc. But when you talk to so many people on the street, why is BHEL not joining this capital goods party?
So let's break down BHEL as well, okay? One opportunity is the railway opportunity. Significant, but not the main part of their order book. The other part, of course, is thermal power. And, making the substations, making the grids for thermal power. And in general, worldwide, what's been happening is the shift
to
from
renewables.
thermal to
Nobody
renewables.
wants to set up
and so that
coal-fired
has
plants.
taken down their valuation multiples as well. And the other thing that's happened is most countries, most governments have consciously tried not to add new thermal capacity.
Absolutely.
So which is one of the reasons why. But of course, you're talking about energy security. So watch out for BHEL. It could be the dark horse. The stock saw a rally from I think 60 to 90 levels late last year. It's corrected quite a bit from that. Which is why you aren't seeing the actual move. But
it's long term.
It's corrected a bit from there. But this opportunity, along with if any new thermal capacities come in India, as we did in our last chat, there is a lot of thermal capacity that is being planned in the next couple of years, and there will be some more reliability or some more necessity to actually go ahead and have coal-based thermal capacities. In that sense, you can have a look at BHEL. It's a very interesting name. It's a dark horse.
Just a caveat, this is not a stock recommendation at all. This is just some analysis and some common sense points that Vivek has picked up from the market. Of course, you have to go out there, do your own research, talk to your financial advisors, and then take your very informed decisions. We're only having a chat, throwing up all the nuances.
You have to play the devil's advocate.
Just playing the devil's advocate, because BHEL is that one stock in the capital goods space that's completely sat out of what has otherwise been a totally breathtaking rally. Vivek, very insightful and very interesting as always. I feel quite enlightened. I think I know the Vande Bharat math, at least with this order, a little better now.
Thank you so much. Thank you so much for having me. It was a pleasure.
All right, folks. So with that, we will take your leave. Thanks for joining in. Do keep sending us your feedback, your comments and queries. We'll see you again. Tomorrow's Friday, last day of the week. Once again, 2 o'clock. Who moved the market?